Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're discussing natural gas and crude oil. Energy was the bright spot of the market today as you saw some major distribution signals in your technology series. Looking at the nat gas daily chart, it was going through an overwhelming degree of sell side pressure, and then today, after it was negative, ended up making a bullish reversal, closing up on the session 1.8%, hugging and recapturing the 1-year moving average. This is your green moving average. You also simultaneously got defended that 20-day moving average. So nat gas is looking structurally a little bit more bullish, and now you have a little bit of a low to trade against. Simply speaking, going long here is not a bad risk to reward in the event that you were to break down and get a daily close below this low pivot. That would be your defined stop loss on the trade. That being said, I don't hold direct exposure to the underlying nat gas commodity. I am hoping for a little bit of a lower entry, but I do still hold some common shares in some of the resource stocks like RRC, which I've been accumulating with members into common shares off of this 32.90 zone, which the stock is still seeing an incredible amount of volume and acting quite well. WTI crude is another one that had a phenomenal trading day today. What news hit crude oil? Well, basically the September 19th week ending of the week ending September 19th, crude oil inventories fell by 3.821 million barrels. So that is showing a significant drop in crude oil inventories. The drop marked the largest decrease in 7 weeks and the fifth draw in the past 8 weeks. So what is that saying? That is showing us that there is a little bit of an underlying demand and bid in crude. Crude is a tricky one here because every time it seems like it's breaking down, they just pop it up and then they start selling it off again. So I really don't hold any sort of positions in crude. It's still kind of chopping around in no man's land. Despite the fundamental backdrop in inventories falling, you still are kind of trading in a little bit of a no man's land, and you haven't given a true breakout signal yet. This could be one big bullish trap before it goes lower. I did have it priced in that crude oil should at least come back down to this daily chart gap fill all the way back in your May-June period. But nevertheless, crude stocks and XLE are actually ripping and looking like they're trying to break out to the upside. So names like XOM showing some complete and utter strength today. Valero has been a very, very ridiculously strong stock to the upside. But nevertheless, crude oil rallying on the back of more demand, falling inventories. We'll see if it can start to gain some technical momentum. Right now, it's a no touch, but it's very close to giving us a potential breakout signal. If it can break through a little bit of this wedge pattern, then we at least have a minimum upside move back to your daily 200 moving average. Please give this video a like down below, and we'll see you on the charts. If you're interested in how I'm trading, definitely check out my YouTube channel.